Good afternoon. Ira Epstein of Linn Associates with your financial market wrap-up for this wild, in fact, every day is wild right now, but it was a wild Thursday, April 2nd, 2020. You know, the big news, of course, were the jobless claims. Another 6.6 million came on the rolls. Add to it last week, you got 10 million, and we know it's going to grow again. We're going up in these numbers. The market shook it off like it didn't exist. Maybe the market is thinking, and it's possible, saying people are at least getting on the rolls. Now, if the government can get the money into their hand, the dent to the economy gets resolved. The problem is bureaucracy. I'm sure you're aware of that. Getting that money to the people, there's always twists and turns. Let's see how fast it actually happens. It's supposed to happen right away, but I'm sure there'll be a gap between people that think they should be getting money and those and getting it into their hands. It's probably the right way to say it. But a powerful day. Did it change my opinion of the market? Well, you know, I did a report in the research area of our website on stock indices and the Fibonacci count. They haven't been violated in any manner. So you were down huge yesterday. You made up some of the gains today. That's the way to look at it. But let's look at the charts and get a feel. But before I go there, gasoline up 11 cents. So that idea that 58 cents may be cheap enough, well, coming into that, certainly that way. Big rally in the energies as President Trump is taking a role in trying to get Russia and Saudi Arabia to both stop this, let's call it a trade war between them, who can get to zero the quickest, and maybe that'll mitigate that. I wonder if they're going to ask the United States to do something, but we can't. I don't think we can do that as a nation. Texas has the ability within Texas to limit production of wells. Let's see how this all plays out. Interesting day before I go to the chart. Bond market to the upside. Note market down slightly. Gold, silver, copper up dramatically. Dollar index higher and a good rally in stocks. So let's go here and take a look. For the week, tomorrow's the last day of the trading week. We're down 7 points in the S&P. I'm worn out from it. It doesn't feel like you're down 7 points. Ask any trader, they'll tell you what's going on. You've still got this big decline, and you've had a very minor bounce on a closing basis on weeks. Now, we're not through with the week, but you're not going back up here in one day, so I'm not worried about that. Where are we? We fell hard from this 38% retracement off the low, fell back. You're making up out of yesterday's loss. Now remember, yesterday you were down in the market, wanting the S&P 121.75, and you made back today 68 points. So I don't want to give you the impression, as much as the market's up, that it made back everything it lost. It didn't. It still has this area that you have to look at. When we come to the swing lines, there is no trend. I want to make that ultra clear in the S&P. You have a higher high, lower low pattern. That is not a trend. The battleground is crystal clear to me. It's the 18-day average of closes. You get under it, you swing back. You get over it, you swing back, and it's back and forth action. How do you want to go home over the weekend is obviously a question that traders are going to take into consideration. You get a lot of action during the day, but what do they do at the very end of the market will be interesting. Bollinger Bands are not in play right now. They're too far away. Now, that doesn't mean you can't get to them, but to get to the upper band from here, you almost got to rally, 300 points, or to get down to it from where you're at right now, break 300. So that's pretty hard to do. When we get over and we take a look at momentum, it's up. So I have the bias up because the market did close over the 18-day average of closes. I have the momentum up, but I don't have a trend on the swing line, and I can't get one. Even if the market were to let go to the downside, it'd still have on this pattern, this higher high and the lower low, and if it just rallied from here, I'm still stuck with the lower low, so I can't get a pattern there. In the NASDAQ, the market was just good enough. The low today, 73.76, did not violate that last low of 73.65, held it and came right back. You do see that 18-day average in the battleground. If you take a look at where you're at and you look at yesterday, let's take a look there. We were down 347 points yesterday, and you were up half of that today, 188.5. When we come to the Dow The Dow just came back to the 18-day average of closes, but unlike the other two, it's in a bear trend on the swing line with lower highs, lower lows. Now, admittedly, it came back right at the end of the day just enough to take away from the bears that feeling that they had control, because you closed over the 18-day average. Get over this 2386, you knock out the pattern of lower highs, lower lows, but you don't start an uptrend. You would just knock out that pattern because you'd have a lower low in place. You're not overbought, momentum up, bias up, swing line down. The Russell is the same as the Dow with one exception. It closed today at 1081.70, so it kept the pattern to the downside. This is still the most bearish of the charts. You've got lower highs, lower lows, bias down. Momentum doesn't yet want to join in. We'll see if it decides to do it tomorrow. In the VIX, the trend is down. The bias is down. You're under the 18-day average, and you're very oversold in this market. In order to negate the downtrend here, you have to get over 60.59. But the pattern has definitely come back from the 80s into the 50s, so you've taken back a chunk of the volatility, but readings in 50 are still very volatile. I mean, we're just coming from an environment where 20 was high and 10 was too low. And now I'm talking to you 80 and 50. Nah, still very high. In the bond market, you're playing overbought. You know, I'm not in love with this market on this upside. It seems to me it's crawling and trying to get back into here, and it's losing its way right now as I see it. Same on the 10-year note. Overbought, climbed up, but did a better job of challenging this. And as I said yesterday, it's going to be a real trick to get over that Bollinger Band to take out these highs. You'd probably need to do that next week if some bad, really bad news on the COVID-19 came out and the market had interpreted it as bad news. When we come to the dollar index, I want you to look at that line in the sand and what this market is doing. It is running that number. Now, until you take out 98, 95 and a half, the trend of the market remains up. The bulls are defending the market as it breaks back to the 18-day average. But where's their profit objectives is what I've got. The lower Bollinger Band's way down here, and there's no way for me to get bearish on this pattern. The only thing is the bull pattern, and you're talking in order to get up to a Bollinger Band 104.26, they've got to be looking at other vehicle numbers to step out of the market with. Could be window envelopes, could be pivot points, there'll be different ones. In the eurocurrency, the trend remains to the downside. You've got the lower highs, you have the lower lows. I think you'd agree with that. So still in the bear camp here. When we come over to the Japanese yen, we have a market that's got higher lows, higher highs in it. The support should be the 18-day average to the 100-day average. What the bulls don't want to do is see this 92.29 taken out. If that happens, there's problems for the money. Actually, it's 92.28. So 92.27 would negate the uptrend. It would not start a downtrend because you'd still have the higher high, lower low pattern. In Bitcoin, I said yesterday that I'm friendly this market. I still am. I think the bulls are trying to grab control by getting it up and over the 18-day average. Now what do you do with it? That becomes the question. In fact, yesterday, looking at it, you still had the lower high, and you were trying with this move to get an outside day or another move to the upside, and the 18 was holding it back. I'm looking at that, and I know what I would have said on a trade like that. The bears have to defend right there, and they didn't, and you get your pop. Are you on your way to the upper Bollinger Band's the question. You are overbought, and at some point here, this trade, and I've said it before, is going to start considering looking at it. They're going to say to themselves, you know something? We got the halving situation just about a month and a half away. When do you start discounting that? In the June Brent versus WTI, well, you got a bounce today. Now, how much did that spread change? Yesterday, the spread was at $1 even. Today, $1.08. That's quite a bit, $1.89. It almost doubled in its price, as the idea there would be what's going to happen in world oil, which one does better, who can control what. When you come to the June Brent, you can see that you came out of your downtrend. This is how the market looked coming in. You had an embedded reading. You were still in a downtrend. If the red line gets over 20, that's a signal that the market is now losing that momentum that it's had down here. That's what happened. I didn't expect it to get to the 18-day average all at one time when that occurs, because now it's hit its upside target. And notice where the market stopped. The 18-day average is 30.40. The market finished at 29.94. So it got through it and thrown back. But you've lost that embedded reading. The only day you can get it back is the day after you lose it. Otherwise, you got to rebuild. I expect the market's going to have to rebuild. Same thing happened in the WTI, except it wasn't in an embedded situation, really. Or was it? Both numbers were under 20. Both were not under 20 the day here. You have been oversold, and this market's just moving like that. So getting back to that 18-day average doesn't surprise me. The 18-day average is 27.49. You finished 28.05 over it. This is more bullish than the Brent. This now has higher lows, higher highs. If it wants to push forward, 34.88 is the resistance point in the market. Support right here at the 18-day average. You don't want to see this 23.63 taken out. In reebok, if we take a look yesterday, day before, now let's get to these numbers. You had lost the embedded reading right here. Then you gained it back. And if you lose it again, watch out. And that's what happened. And you went to the 18-day average. That's the objective when something like that happens. If you were over it and you had a bullish embedded reading, you're looking for the first test of the closest moving average. Same thing this way. In the nat gas, oversold, making a run towards new lows in the marketplace, right down through here. I told you, we're at that time of the year. You don't need nat gas for an awful lot of things right now. We're going to be 70 in Chicago over the weekend. It's moving east. Just think of all that's going on, so that improves things. As you know, I did a special report, and they're only up for 3 business days when I do these, on Fibonacci counts on stock indices in the VIX. It's still right where it should be. So if you want to take a look at it, you go to our website. Now, how these work, you get 3 free reports a year when you're looking at us. If you're a subscriber to my research, they're absolutely free. They're included in everything with it. If you're not, you get 3 different reports or 3 of the same, because I'll put them out in stock indices throughout the year. That's up to you. After that, it's a couple of bucks. But the idea there is subscribe to our research, support what we do. I'm Ira Epstein. You have a great day. Thanks for watching, and I'll see you all tomorrow.